the economy, and there's a lot with taxes that I want to talk about. My name is Gilbert Carmona. I own Gilbert M. Carmona EA Tax and Accounting Services right here in Rutherfordton. I am located at 113 Whitesides Road, right next to Southern Baptist Church. I also have an office in Polk County in Tryon, the beautiful downtown, at 226 South Trade Street in the historic Art Deco building. Come see me. You can call me at 828-289-9300. If you have any questions that you want to email me, my email is very simple, Todd. It is gilbert@gilbertcarmona.com. It doesn't get simpler than that, does it? Just send me an email and I will try to answer your question if I can. I've gotten a lot of calls. It's that time of the year. It is that time of the year. And why do I do this program, Todd? Because taxation with representation has never been a good idea. It has really not. It's kind of backfired on us. I'd like to welcome our Northland Cable subscribers, Northland Cable Channel 5. A lot of you out in Polk County watch me there. And those of you live streaming, www.wcab59.com. You're here watching me live in the Blue Room, which is very blue. It's a very blue room, and I like the new poster you put up. You guys need to go look at that. It's great. You get a great view here. So what do I want to talk about this morning? A little bit of everything, but I want to start. Let's go ahead and get Trump out of the way. Gilbert talks Trump. I read the best quote this week. The media wants to portray our president as a runaway freight train. I mean, this man can do nothing right. But I read a quote, and it said he's not a runaway freight train, he is a focused bulldozer. And this is the first president since Ronald Reagan that I can remember that is doing what he said he would do during his campaign. And doing it right away. The big article yesterday was that the White House staff is left panting. They can't keep up with him. Does he sleep? I heard he just takes short naps all the time. And he is just goes all around the clock, talking to world leaders all the time. And I don't know, but I'm excited about what's happening. And don't get caught up with the white noise, all that background noise, and don't believe anything the media said. They're the ones that told us Hillary was going to win by 20. And that's what I keep reminding people of when they say, well, the media said. Yes, you're right, the media said that, but they also said Hillary was going to win by 20. And unfortunately, our college students who never learned about government or American history don't seem to understand. So let's talk about some positive things. I had a real interesting phone call with an IRS agent. I'm going to talk about the IRS 1 minute. And they don't know what's going to happen. They are understaffed, but they were very positive about what's going to be happening with the new administration. There's a hiring freeze right now. But that's not affecting their day-to-day operations. They're a little long on answering the phone, so if kind of a problem. Now, I call them every day. It's what I do. It's part of my job. What is my job, Todd? I am an enrolled agent. I got right into this. See, we've been here talking for 25 minutes. So like the program for me started 25 minutes ago when I got here with Todd. I am an enrolled agent. An enrolled agent is a person who represents taxpayers in front of the IRS and states also. Any state, we're federally licensed, so I can represent taxpayers in all 50 states, and I actually have taxpayers all around the world that have tax issues with our government. I used to say I had clients in Germany, but they moved back. But I've got clients in China, Brazil, Mexico, to name a few, and I think I named all of them really. And here in the United States, I've got clients in over a dozen states. So I talk to the IRS a lot. It's what I do. A lot of problems are simple problems that you can solve with just a phone call and a few letters. Most problems are if you get on them and you execute and you do what they're given what they're asking for. Usually, they just want a piece of data to plug in, and they'll either accept or deny. It's that simple. But I was talking to an IRS agent yesterday, working on a case, and just talking about their workflow and things that are happening. And a couple of interesting things came out of that conversation. So they're understaffed. We all know that right now, which may or may not be a good thing. In the long run, it's going to keep budgets down. In the short run, is it going to hold up tax refunds, which is really what people want to know about. Tax refunds this year are not going to be released. If you had earned income tax credit, child tax credit, or additional child tax credit, those child tax credits, earned income being the big one, EIC. If you had those by law, and this is a law that was passed last year, had nothing to do with Trump, unlike what some people are saying, it had nothing to do with that. It's not a budget cutting measure. It's actually a fraud prevention measure. They did that to make sure that everybody claiming those credits should be getting those credits rightfully, that it's their credits, so that the right person is claiming those children. And they wanted to use it to reconcile the 1099s and W-2s and make sure that there weren't any fraudulent filings. So now what I had heard is that they weren't even going to begin processing those tax returns until February 15th. But yesterday I heard that the tax returns are being processed. They're just not going to start releasing the money until February 15th. So there's a little confusion there, because initially we were told if you're waiting for a refund and you have these 3 credits, just these 3 credits. Other people have said, well, I've got my refund already. I filed my tax return on the 23rd, got my refund last week. Yes, but you did not have those credits. Yours was a straight up refund because of an overpayment of tax or some other credit that you may have gotten. Typically, those are the big credits, though. There's very few other credits left that get you that kind of, those kind of refunds, those $4,000 and $5,000 and $6,000 and $10,000 refunds. So people are waiting for those. We were initially told not to call the IRS, not to even bother them until February 27th. Now they're saying they still don't want you to call till the 27th, because what it does is they're already understaffed. It just ties the phone lines up, and you haven't lived until you've held for the IRS for 3 hours, like I have. People want to live on the edge, do that. And the worst part is you'll be on hold. I've been on hold for 2 hours, and there's this tone we get that lets us know we're next, and then they hang up on you because they dropped the phone or they pushed the wrong button or who knows what. And that is just, so they don't want you to call till the 27th. Which I would still adhere to that. You can always go to Where's My Refund at irs.gov. That's irs.gov. Do not go to any other website, because you will enter your social security number and you've given it to somebody who's going to use it for fraud. I actually saw one that was like irs.info. And it looked just like, I don't know if they've taken it down. I haven't checked that one in a while. It was up for a while. irs.info, and it looked just like the IRS website. Though I'm on the IRS website every day, so I could tell things that were off. But it was, if you didn't know, you would think that was it. And it asked you for your name, your date of birth, and your social security number. You don't need that to find out your refund. All you need is your social security number, your filing status, and your anticipated refund. That's all they need. So if you go to a website that's asking you for any other information, you are at a fraudulent website, and it's irs.gov, the only website that the IRS uses to communicate their information. And then the state, North Carolina, DORNC, has their Where's My Refund. Again, they will not ask you. I've yet to go to a state site. Now, if you go to my website, GilbertTalksTaxes.com, I have a page where you can go to every state. There's a link for every state. And I'm constantly updating those because these states, for whatever reason, insist on changing it around. I don't know if they get a new web designer and he decides that he's going to change their website. But I'm constantly updating those. So if there's one that's outdated, please let me know. There's 40-something of them, because 10 states don't have state income tax. And here's particularly people that live in North Carolina. I have some that work in Tennessee. I have some that actually have business and work in Florida, and I have people from here that actually work in Texas. I work for companies in Texas, and they have no state withholding. So there's about 42 states on there that I've listed, and you can click on there, and that every one of those we look at, and those are the official state websites. Again, be careful, be leery. If they ask you for anything other than your Social Security number and your anticipated refund amount, be suspicious. They may ask you for your filing status, then they may ask you for what year. Some states actually let you go back a couple of years. The IRS only lets you look at current year, which a lot of people file prior years for whatever reason. I've already had 2 or 3 this year that have come in and they did not file last year's for whatever reason. They didn't have their paperwork together. Most of them they know they're getting a refund, so they're not worried about it because there's not going to be a debt. If you're getting a refund, you can file late. The IRS doesn't like it, but you can file late. It's when you owe money that you're going to incur the wrath of the IRS with penalties. Did you like that? Todd liked that. Todd liked that. You're going to incur the wrath of the IRS with penalties and interest, and it'll add up quick. It'll double a debt in no time. So you don't want to do that. And if you wait too long to file a prior year return, you can't claim those credits. Credits are only good for 3 years. So if you don't claim them within 3 years, you will lose them. Some people wait. Again, they know they're getting a refund, and things happen, life events happen, people get sick, and they put it on hold, and then 2 years goes by very quick, and you don't realize it. And I've had people actually lose credits, a lot of credits, a lot of money. So you don't want to do that. Let me talk about before we take a break here, let me talk about W-2s and 1099s. They were supposed to have been issued. Now, this is it's really not the law, quote unquote. I mean, it is the law if you're an employer. You have to have your W-2 in the mail, to your employee by January 31st, and your 1099 in the mail. Now, things happen, and people get behind. There is a penalty for not doing it. Typically, unless somebody complains, the IRS doesn't follow up on these. They're more concerned about you getting the information to them. Now, employees and contractors, and we've heard, and we had a few call us because of our clients. That doesn't mean that you have to have it by January 31st or even February 1st. There is time for it to get in the mail. That doesn't mean you can call up your employer and start yelling at him. That's not how this works. And that doesn't mean you can call the IRS and file a complaint. The IRS will actually give it 30 days till they consider it late. So they don't even want you to contact them till March 1st about it. And what they actually want you to do after March 1st is, if your employer cannot, will not, or is unable to, for whatever reason, get you that W-2 1099, at that point you can file your tax return. You cannot on February 1st run somewhere with your last pay stub and say, well, I didn't get my W-2, file my tax return. It doesn't work that way. And if you do that and there's an error, you could actually be subject to some fines and penalties. We won't file a tax return without a W-2 because that's the law. You're supposed to show me a W-2. Your last check stub does not count. Why? Because there's a lot of accounting that happens behind the scenes, and your last check stub isn't always accurate, especially when the year ends in the middle of the week. There's reconciliations that have to happen, and then there's all those employer-provided benefits that go in all those little boxes that have all those little codes. Those things may not mean anything to you, but they mean a world to the IRS, and they need that information. So you're supposed to wait. Now, if the employer went out of business and you have no way to get a W-2, you still need to wait till March 1st, and then there's some forms and things you can follow through, but it will delay your processing. That's why you want to wait and just be patient and get that from from your employer if you can. And a lot of people have been very upset because they expected them on February 1st. Well, and it gets back to that conversation, Todd, that you and I have had and that I've had on the radio. The tax refund has become an economic event for people. And they need that money. They so count on it. And really, you shouldn't. Because as you saw this year, they held the refunds till the 15th. And I really believe that's going to happen every year going forward. And I wouldn't be surprised if they push it back till March 1st. It just wouldn't surprise me at all. You can't, you don't know. Hawaii and several other states, last year there were 5. I don't have that list in front of me, but Hawaii already announced you're not going to get your refund for 16 weeks. They are going to check every tax return because they have generous social programs there and they give people money. You're going to wait 16 weeks. Last year, I specifically remember Alabama because I had some people there. Alabama, Oklahoma, Missouri, Mississippi, some of these states didn't, and South Carolina held them, did not process tax returns until middle to end of February. Refunds for credits. So let's go ahead and take a quick break. I will come back and I want to talk about if you have an IRA. I've had several situations this week involving IRAs and rollovers that I want to talk about. So if you've got an IRA or if you're thinking about gifting, I'm going to talk about those 2 topics when we get back. Hey, this is Gilbert Talks Taxes right here, WCAB 590 AM. I get asked all the time, Gilbert, with 2017 already here, will your hair continue to look as fabulous as it looked in 2016? The answer is yes. How can I say that so confidently? Because I go to Robin at RSL Salon. Call Robin for an appointment, 289-9110, or call Emily at 447-3524. Whether it's hairstyling, manicures, or pedicures, it's always RSL Salon because everyone deserves to look fabulous.
What can I say about Cafe at the Mall, Cafe to Go, and 10 North Trade Cafe Bakery that can do them justice? The cakes, fresh baked breads, sandwiches, and salads, everything is delicious and perfect. Whether it's sit-down dining, lunch on the run, or catering for any occasion, Cafe at the Mall, Cafe to Go, or 10 North Trade Cafe Bakery is the place to go. Stop in at Cafe at the Mall, Cafe to Go, and 10 North Trade Cafe Bakery and mention Gilbert Talks Taxes and get a free cranberry oatmeal cookie, the official cookie of Gilbert Talks Taxes.
We are back. That is the International Morse Code Signal. This is Gilbert Talks Taxes because taxation with representation has not been such a good idea. But got some texts here during the break. If you need to talk to me, my telephone number is 828-289-9300. Office is at 113 Whitesides Road, right next to Southern Baptist Church here in Rutherfordton. It's February 4th. I'll get that day right. 23 degrees outside. Beautiful, cool, crisp day. So Todd, my engineer this morning, Todd, we have all kinds of conversations about so many of these things. I don't know when I'm on the air or when I'm off the air. I want to talk about something I see this year, and I want to tell people, if you've got investments, please talk to your financial planner more than once a year. Technically, they're supposed to talk to you twice a year. Unfortunately, that conversation usually involves a phone call. Hi, Bob, is everything okay? Sure is, thanks, bye. And they really don't get into anything. People bring me their 1099s from their portfolios, and I find all kinds of issues, and I'm really surprised. Now, there's been a little confusion about the IRS rule with your 1099, I'm sorry, I see it on the 1099, with your IRA rollover. They made a rule last year, I talked about it in depth last year. They made a rule that you could only roll over one IRA once a year. In a 12-month period, you can only have one rollover. And that is why, and I'm talking about taxes here, I'm not getting into financial planning, people ask me questions about financial planning, and I tell them I have to have a meeting with you because financial planning is a one-on-one thing. No two people's situations are the same. You cannot give blanket financial planning advice other than saving money is good. That's pretty much as blanket as you can get. Because it is, everybody's situation is different. People's goals are different. I talked about this before. Typically, a financial planning session with me involves reconciling what the husband wants and what his goals are with what the wife wants and what her goals are. I mean, the husband's idea of retirement may involve a bass boat. The wife's idea of retirement may involve a summer home on the beach. We've got some conflict here. And that's typically what the conversation. It's not so much about all this, where do you put the money in this stock versus that stock. That's really not the issue. The issue is what is it you want? What are your goals? Because it's not, and it's never a dollar amount we focus on. It's a lifestyle issue. How do you want to retire? How do you see your retirement days? So, but one thing I personally advocate is not having way too many IRAs, way too many 401k plans. What happens is, especially here in this county, I see it here, Polk County, people up in Hendersonville, people in South Carolina, my clients, where a lot of these mills closed or they were bought. A lot of these manufacturing facilities were bought, or even other facilities too, other businesses were bought. So you were working there, you may have worked there for 10 years, you contributed to a 401k, and now somebody either bought the place or the place closed, you went and got another job, they had a 401k, so you now have two 401ks. Or you may have three 401ks, or you may have rolled one over into an IRA because somebody advised you to do that, but you have one there. I have many people that have 2 or 3 IRAs, 401ks, and some people like that. They consider that they're diversified. I think it's just more stuff to keep up with. And case in point, I had a lady bring me her financial papers. She has 3. She has 2 401ks and an IRA. And she needs some money for medical bills, and she needs some other things that she wants to do in her life, some repairs to her home. She's still working, so there's a lot of things going on there. One of those, the IRA, had been sitting stagnant. We call that it went to cash. It was not sitting in an active fund making any money, and it wasn't getting any interest. It literally sat in cash for the last 5 years. She didn't know this. To her, she just had this money there, and it was quite a bit of money. I mean, quite a bit of money is different to everybody. It was quite a bit of money. It was quite a bit of money to me. Sitting there, not earning any interest, which really, when you consider what happened to the Dow Jones and investments and portfolios the week after Trump became president, I heard a statistic that if you had your money in the market the 4 days after the election, you made more money than the 3 years prior. So it's a real shame, but this is an example of nobody's watching what's going on there. Are we okay there, Todd? You look nervous.
Good.
Everything's good? Okay, everything's good. See, that's why I like an engineer here. He's watching it. Watching every dial and every knob. Keep up the good work. So you need to watch this. So people bring me all these portfolios, and I see all these things that should have been discussed before. So I'm working to fix all that, and I said, what about the person that's supposed to be watching this for you? There was an appointed person. She said, I haven't heard from him in 10 years. So if you haven't talked to your financial planner in the last 6 months with what's going on in this market, if you haven't talked to your financial planner in the last 2 months, please get some help. You can call me, 828-289-9300, or go back to whoever your financial planner is, and just make sure that everything's okay. So now let me talk about the one rollover per account per year. There was a little confusion in the beginning. So many people have multiple accounts. You could only roll over once. You had one rollover in a 12-month period. What is a rollover? A rollover is when you have money in one IRA and you want to put it in another IRA. That's called a rollover. What's important about a rollover is that there is no taxes and no penalty if you're under the age of 59 and a half. Well, let me get back to the IRA rules. Money gets put in a 401k or an IRA. Now, those of you that work for government in some form or another, you have a different plan. It's called a 403b. Just different set of rules, but the basic concept's still the same. Money you put in there is tax deferred. Now, they use the word tax free. It's really not tax free. Nothing is tax-free, really, ultimately. You're going to pay tax on that money. The idea is you're putting it away tax-deferred now when you are younger and you're in a higher tax bracket. You're going to be pulling it out when you're older, retired, in a lower tax bracket. So that's the strategy behind this. So you're putting this money away tax-deferred. If you're 59 and a half and younger, you pull that money out, there is a 10% penalty. The government says, we'll let you put this money in there tax deferred. You will not pay tax on it. And it can be a huge savings for people. Husband and wife contribute under the age of 50. You can contribute $5,500 each to an IRA. That's $11,000. That reduces your taxable income by $11,000. That's huge. If you're in a 20% tax bracket, 15% tax bracket, that's a lot of money. I've seen it turn a debt into a refund. So I don't ever dismiss doing these. Okay, so people have these IRAs, and you're allowed to move it from one IRA to another for whatever reason. The reason they allow rollovers is for what I just mentioned earlier. You worked at a mill, you worked at a facility, it closed, or you quit and went somewhere else. That money's your money. Even though the 401k, one of the features of a 401k, not every 401k does it, but one of the features is management will match any money you put in there. Sometimes it's 50 cents to $1. Sometimes it's 1 to 1. It just depends. Every plan's different, up to a maximum of 3, 4, 5%. People that want to work with me and want me to do their financial planning, one of my rules that I have before I will work with you is if there is a 401k at your work that has a matching feature, you must max that out and put the maximum amount in. I don't get a penny for that. Why do I do that? Because you're giving away, you're basically throwing away free money if you don't do that. So that's one of my rules. You must match your 401k unless you've got a really compelling reason that you can give me for not doing that. I'm emphatic about that because you're giving away money. If you put 3% in and they match 3%, why would you not do that? You've increased your income by 3%. That's better than a raise, and and you're saving this money, and you get a tax break for it. That's it. That's a win-win all the way around. Okay, so people quit their jobs. They have these 401ks, even though they contributed that money. When they contribute that money, it's now yours. Now there is some vesting rules. You have to work there for so long. Typically, they're very liberal, a few years. Some could go up to 10 years, but they're not. Most of them vest pretty quickly nowadays, or they have a percentage. They have a percentage rate. So, point of the story is you've got that thing there. Now you quit. You want to do something with it. It's your money. You've got 3 options. When you leave, when you terminate, you're terminated. You're asked to leave, or you leave, or the place closes. You've got 3 options. You can take the cash. If you take the cash, you're going to have to pay the tax on it, which minimum 15%, and you're going to pay a 10% penalty. So 25% of your money is going to be gone. You can leave it in the plan. Some places allow you to leave it there, and they'll manage it for you. If you do that, make sure they're managing it for you. Don't let it happen like what happened to that lady. Hers went to cash and sat there and didn't even earn interest. It sat there just as a cash account. Basically, cash sitting in a drawer. Make sure they're actively managing it. Or your third option is you can roll it over. So what happened is, a few years back, a lot of people had these IRAs and 401ks, and they thought they were like Warren Buffett or something. I don't know what they were thinking. I don't know why anybody would even do this. But they started rolling these things back and forth, chasing, trying to make money. They thought they were going to, I don't know, they thought they were playing the stock market or something. I don't know. So they would start rolling these IRAs over. Now, some places will actually give you a check, and you have 60 days to take that check and put it in another IRA. Well, what do people do when they get cash? Todd? What do people do when they get, well, I was hoping for I was hoping for a more, everybody here's throwing out their opinion. I was hoping for words more technological than blow it and spend it. But yes, sure, let's go with that. They blow it and they spend it. So they get $8,000, $9,000, $10,000, or 20 or 30 or whatever they get. And, well, I've got 60 days. I'll just borrow a couple of $1,000s and do something. After all, they're having a sale at Belk. And they go and invest in some purses and clothes. And then when the 60 days are up, they don't have that money to turn around and put it back in there. So they're caught. Other people, there was this notion, and it got put out there by some guy on TV, and really a bad idea, but I'm sure it sounded good at the time. Put it in a CD that's going to earn you whatever, and so you're kind of double dipping. But no, that's a bad idea, because you can't always get your money out, and you're really timing that way too close, because it takes the financial house 3 days to post that money to your account. So if you miss the timing on that, you're stuck with it. And what happens is they report this to the IRS. So people would say, yeah, I rolled the money over, when they in fact did not. They blatantly lied. If you can believe that, Todd, people lied to the IRS. They blatantly lied, said they did roll it over, they didn't roll it over, and the IRS just got sick and tired. And actually, an IRS agent said that to me. It was a high-level agent. We were talking about this because I had a lady that claimed she rolled it over. Turns out she hadn't. When I did all the research and tracked it all back, she says, this is so common. We see this all the time. She said, and we're tired of chasing these people down, so we're getting ready to implement a new rule. And I said, really? She goes, well, I don't want to talk about it till we implement it, but there's a new rule coming to stop this kind of behavior, and that's the rule. So if you're thinking about, and I gave you all that background to tell you this, if you're thinking about rolling over an IRA, let it be IRA to IRA. Don't take the money. Be aware you've got a tax implication. You're only allowed one a year. If you want diversification, talk to your financial planner. There are ways to diversify within an IRA. The way I describe it, an IRA is a house. You actually have a house. What you put in it is not the IRA. Your stocks and your bonds and your portfolio, that's not the IRA. The IRA is a shell. Your 401 is a shell. What you put in it is what matters, and that's what your financial planner can help you with, and that's what I can help you with. That's what anybody that can give you. But work with somebody and be aware you've got a tax implication when you do any of this stuff. You don't want to get caught. I've seen people get caught with a $900, $1,800, $2,500 tax bill for pulling that money out and not having a hold of it. And you're only allowed one a year. People weren't aware of that rule, and they've got 2 and 3 rollovers, and now they're on the hook for money they don't have because it's sitting in a portfolio somewhere. And if they pull it out to pay the tax bill, they're going to have another tax bill. So it's a serious situation, and I see it a lot. I've already seen 3 this week, so I'm very concerned that I'm going to see more. Let's take a break, Todd. I'm way overdue. Why aren't you giving me a heads up here? You were watching the knobs. I know. The Gilbert Talks Taxes right here, WCAB 590 AM.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889. Mention you heard Kimberly on WCAB 590 AM, and Peterson will give you $20 off a full detail or $5 off your next North Carolina inspection. Peterson's Auto Service and Detail Shop, a place I feel comfortable going to.
I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. Well, he didn't realize that. Hello, this is Gilbert Talks Taxes. We are back. We're back on the air. We haven't stopped talking the whole time. This fourth day of February. I'm having a hard time getting this out. This fourth day of February. The temperature's just skyrocketing. It's 26 degrees while I'm talking. Actually, it's gone up a half a degree while I'm talking. I want to welcome everybody. This is Gilbert Talks Taxes. I am Gilbert Carmona. Actually, Gilbert talks a little bit of everything. I got an email. So have I pretty much said everything I wanted to say about IRAs and IRA rollovers? Be aware. Really be aware. If you've got an IRA, I would really like to talk to you if you have any questions about an IRA and tax implications of an IRA and what to do. Give me a call, 828-289-9300. There's just a lot of confusion out there, and there's a lot of bad advice been given. There's a lot of old advice been given because rules have changed. And rules are changing. And there's a lot of confusion about a Roth. I mean, people understand the basic concept. Okay, with a Roth, you put it away, you pay the tax now, you don't pay any tax later. Yes, that's the basic premise of it, but it's got its own set of issues that you need to discuss. If you're thinking about putting anything other than a traditional, remember the IRA is your house. If you're thinking about putting anything in that house other than traditional investments, the IRS does allow you now to put gold and silver in there, and you can actually put bullion and precious coins. You can put valuable coins. There's a lot of rules to this, and there's a lot of misinformation out there, and that may not be for everybody. There is no one size fits all solution for this. Every person is individual. You need to have that discussion. I'd love to have that discussion with you. Please give me a call. I want to talk about gifting and giving, but I'm going to talk about something real quick, just because I think it's really interesting. I talked to nobody may care about this except me, but I was talking to that IRS agent this week. We talked about several things. We talked about the IRS and what they're doing and where they're going. And I just got an email from India, from a group in India that specializes in trustee services, tax advisory, accounting, reporting, all these services. And the IRS agent was shocked. Really, he was surprised when I told him that I get solicited by offshore companies all the time. I can actually have a tax return done in India for $5 as a professional, and they will do it and get it back to me. And it gets back to this ID theft. And the reason him and I even had the conversation is there was a rumor going around, and he said he's pretty sure it's a rumor. He doesn't see the IRS doing this, but the IRS offshoring some of their services. But you get back to the how do you guard security? How do you guard people's ID? Sure, you can use these government vendors, and really, the United States government has so much of its operations already overseas between NATO and the military and everything else they've got going on in all these other countries. It's just a simple matter of switching offices from one office to another. The data's still sitting on these servers. But so when I told him about a lot of tax practices offshore their tax returns, he says, well, I heard about that, but is it a lot? I said, it's a lot. I just got an email now. They want to talk to me about this. Now, I will never do it. Your data will never leave my office. I do encrypt storage offshore of data only because if something happens to my computer, I don't want to lose your data. But that's a approved, encrypted, state-of-the-art facility that I subscribe to, and I store data, and you really store it up in the cloud.
You don't have any bathroom servers?
No, nothing like that. No, I'm not even going there. No, there's no servers in my bathroom. No. It's not the Carmona Foundation. I'm sorry. The everything I store is highly encrypted. They actually have servers in Canada, London, and I think Australia or New Zealand or something like that. The idea is that it's spread all over the globe, and this is a company that does this for huge corporations, or as Trump would say, huge corporations, and it's expensive. But this is the kind of level of service that I expect and that my clients expect from me. So I do that, but your data does not leave my office technically, and only I or Christy or Allison, we work on your data. Nobody else works on your data hands-on. We have people that do number crunching in Excel, but beyond that, it doesn't. So I said, how do you guard this data? And that is going to be the question going forward. How does the IRS guard all this data? It is not. It's not an easy task. It's not an easy task. So, gifting. It happened just the other day. Some grandma, a generic grandma, you pick a name. Martha. Grandma Martha is getting ready to go to the nursing home. So she decides to sell her house for $1 to her granddaughter. Sells the house to $1 for the granddaughter. What is the granddaughter's cost basis on that house now? $1. So the daughter moves into the house, granddaughter, or daughter, or whichever, moves in, pick a generic relative, moves into the house, and of course Martha didn't take care of the house because Martha was older. You know, the stove, only one burner worked because of course Martha only used one burner. And the 3 bathrooms, only one worked because she didn't go upstairs. And this is a real scenario. I see this all. I actually seen this in the 15 years I've been doing this quite a bit. So the house needs $50,000 worth of repairs. Well, the daughter doesn't have the money, so they go to sell the house, which is a nice house. The house is nice. It just needs repairs. So an investor comes along, like my friend that was here 2 weeks ago. So let me get a plug in for him. Safe House Asset Management. Keith. They call Keith at 289-4259. They call Keith, and he comes. He says, "This is a nice house. I'll give you $100,000 for this house. It's a great house. I'll put $50,000 in it, and I can sell it and make a couple of $1,000s for my time. This is great deal. Let's do it." Writes them a check. They all go on because it's not their primary residence. They have another house they never sold. They still have that. This is not their primary residence. They get a 1099-S from Keith's accountant, me, that you bought this house. You report it to the IRS. You now have to pay capital gains. And what was your cost basis? $1. So you pay capital gains tax. But of course, they weren't expecting that, so they took the $100,000 and did what with it? Give me a technological word for what they did. They blew it. They spent it. They didn't think about it. They didn't save a penny. This scenario happens all the time. They now have a whatever, 1,000, 20,000, 15,000, 10,000, 30,000, depending on what else they have going on, $1,000 bill to the IRS. So if you're going to gift any property, I don't want to get into the details. We're going to take a break. I don't want to get into the details because, again, the details can be different. But before you gift something, please talk to your tax advisor or your attorney. Don't just get a happy idea and gift something, because there can be serious tax ramifications. Very serious. When I started the program, I had that one case with the lady that inherited her father's IRA, and of course, there is no tax on inherited things, right? She Googled it. There's no inheritance tax up to 5.2 million. Well, that year it was 5.1 million. 5,145,000 was the threshold that year. So she Googled it. Her and her sister Googled it. There's no tax. So she took that IRA, $75,000 IRA, and cashed it in and took the money and went and had a good old time. Well, she's right about inheritance, but she was wrong about IRAs. IRAs, whether inherited or not, are taxable. She got hit with a $25,000 tax bill, and because she ignored the letters for so long, it went up to about $75,000. Basically, she owed the IRS the entire amount she inherited. Yeah, it's a sad story, really sad story. And she ended up, I helped her set up a payment plan, and she will probably be paying that for the rest of her life. But that is just, if you're going to give something, stop, take a minute, give me a phone call. Give Gilbert a call, 828-289-9300, but think it through. Let's take our last break right now, Todd. Let's do it. WCAB 590 AM.
In your feet, leg cramping, pain when you walk, difficulty sleeping from leg and foot discomfort? Well, you need to see Dr. Jerry Gross at Foot and Ankle Center of the Carolinas. Your feet don't have to hurt. Call 245-6405 today. A good sign is good business. Make your business stand out with a professional sign from DS Signs and Graphics. Successful companies all over the Carolinas are trusting Alex at DS Signs and Graphics. He has the artistic ability to present your company's image in the best light. Not only display signs, but DS Signs and Graphics can customize banners of all sizes. And if you need magnetic signs or window and vehicle lettering, call on DS Signs and Graphics today. They offer a full line of signs and graphics for any event. 3D, sandblasted, storefront, and monument signs are part of the complete selection of quality signage. Professional signs and banners to fit any budget. Let your business stand out. Call DS Signs and Graphics today. That phone number is 286-4900. Or stop by the sign shop located on Main Street in downtown Spindale. And check the website for more suggestions at dssignsandgraphics.com.
I want to welcome Tim Schlabach and Foothills Photo Works, a professional hybrid commercial photography studio. If you're concerned about your social media image, listen up. Whether you're an executive, real estate broker, lawyer, or business owner, your image matters now more than ever. And you know first impressions count. Whether you need professional portraits, corporate headshots, images of your products or facility, aerial photography, and videos of buildings, boats, or large acreage, affordable professional help is here for you. Foothills Photo Works can create media that will help your prospects get to know you better and help you look your best. Foothills Photo Works is located at 362 Charlotte Road in Rutherfordton, North Carolina, but you need to call for an appointment. That number is 828-668-2304. Mention this ad and receive 15% off your first session. That's 828-668-2304. Foothills Photo Works, your media professionals.
Welcome back. This is Gilbert Talks Taxes right here at WCAB 590 AM. And Open Box, by the way, they told me they were going to have another sale today. Although it's cold, I don't know if they're going to have a sidewalk sale. But they're having another sale today. Bicycles, interiors, everything. They're having 20% off on interiors. They're having great deals on bicycles. Open Box right next to the VA there.
Those bicycles are some good-looking bikes.
Those are good-looking bikes. You've been by there? Todd's been by there. Well, I bought Christy one. It's beautiful. You should see it. She thinks I'm the most wonderful guy in the whole wide world for buying it for a little 24-inch aluminum bike, and I got a great deal. I don't want to say because, and he didn't give me this is an unsolicited testimonial. He did not give me anything for plugging him. I plug him because I really like the guy, and he's a client of mine, and I really hope their business takes off. They said they've been doing great. Mention Gilbert Talks Taxes and get absolutely nothing. Price is this low, he's got nowhere to go. There, at where the Food Lion used to be, the Hilltop Plaza there, right next to the VA, TD Bank, right up in there. Go on in there and say hi to Steven. See what they have. Tell them Gilbert sent you. Or don't tell them Gilbert sent you. Just buy something. So, so this whole issue of gifting, there's so many directions we can go in. We're just talking now about transferring property. There's just so much to discuss with this, and all of it has a tax implication. That's the point I want to get across to you. Be careful when you do this stuff. Now, you can gift cash, and there's confusion about that. People, for some reason, think that, okay, so I'm older, like they did in the Bible. They called the family in, blessed them all, and closed their eyes and went to be with their ancestors. I like how it says that in the Bible. But unfortunately, it doesn't really happen that way in real time. There's a lot of things happen between the time you decide to do that and the time you go to be with your ancestors. If you're concerned about nursing home issues and your property and seizure of properties, there's a lot of rules there. And setting up a trust is not always the answer. People say, well, I'll set up a trust, put everything in the trust, and the government can't come take what I have. Well, yes and no. And I've seen trusts set up that really weren't worth the paper they were written on, in the sense of giving them people real protection. And there is a look back period of 5 years. So there's more to that. And you shouldn't react to a fear. When we do tax planning, people say, well, I'm afraid this is going to happen. Well, we don't react to that fear, because most often than not, those things don't happen. You know, when you look at what people were worried about 20 years ago, economically, financially, you look back now and you go, well, that was ridiculous. Just like today, when you look at what the things people are saying, I'm telling you, 10 years from now, people are going to look back at this Trump presidency and they're really going to be shocked at the hysteria they gave to over nothing. It's just the ridiculousness of the whole thing. So we don't financially plan. We don't do these things to a fear, and we don't do it to what's on the headline of the newspaper today, because that changes so often. So that was the point there. Now, gifting. People are getting ready to retire. They're retired, and their things are winding down in their life, and they've got a lot of assets, and they want to start giving some away. I'll get this phone call. If I've gotten this phone call 20 times, I've got at least 20 times last year from different people. I want to give my granddaughters in college or whatever, you fill in the scenario, and she needs $15,000. I heard I can gift $15,000 and she won't pay any taxes on it. Can I give more that she won't pay taxes on it? Well, the recipient of the gift never pays the tax. The person that pays the tax is the giver. That is the person that pays the tax. Why do they do it that way? Just cause. That's how it's set up. Because usually the person giving the gift is trying to avoid paying taxes on something somehow. That's why. So that's kind of what's behind that. But the person receiving the gift doesn't pay the tax. It's the person giving the tax. So you can give up to $15,000 per person, family members, and that's loosely defined. We're all Adam's children, right? Loosely defined who you can give that to, and you don't pay tax. If you give more than that, you pay the tax on what you give. Now that $15,000 is husband and wife each can give $15,000. So one granddaughter is going to Chapel Hill. She needs $30,000 for her tuition. You don't want her to get in debt, whatever. You want to give her the money, you can gift that money. You don't pay any tax on that. It's a good way to start whittling down your estate. If you're worried about taxes and you're worried about being stuck with a big estate, I actually have people that is an issue. They've done such a good job of saving money that they actually will not outlive they won't outlive the money they've set aside. That was always the fear, they're going to outlive their money. We've actually got people that did very good jobs of saving money. They listened, they opened up 401ks, they opened up IRAs, they put money away, they deferred taxes, and now here they are with nice nest eggs. So what you do with it, consider it. Get professional advice. See a tax attorney, see an enrolled agent like myself, see a CPA, and just get competent advice and look at all angles of it. If you're going to set up a trust, please research it. These do-it-yourself kits, I'm very, very leery of them. Yeah, you can set up a trust for $100. Well, if the trust is worth setting up, is it really a big deal to save $300 or $400? If it's worth setting up and you're going to protect a lot of assets, don't get cheap now. Spend the money, do it right, and get tax advice. Anything else? Did we cover it all, Christy? I covered everything. Todd, I covered everything, and I have 2 minutes left.
Wow.
That's all I get is wow. Usually it's 9:02 and I'm still talking. Yes, I got a question. Yes, this year the end of tax season this year is Tuesday, April 18th, 2017. So if you owe the IRS money, what I do is you come in now, you owe them money, I do your tax return, you owe them whatever. You don't have to get that payment to them until Tuesday. It's not April 15th this year. April 15th falls on a weekend. The next business day is Monday, the 17th. Well, because Emancipation Day in Washington, D.C. is that Monday. That's a holiday in Washington. The federal government is shut down until Tuesday, the 18th. So you have till midnight to get that to them. Now, if you owe them money, technically getting it in the mail on the 18th is sufficient, but I wouldn't want to risk that, really, especially if it's a large sum of money. You don't want to risk them posting it a day late and hitting you with interest and penalty. I can't stand giving them any more money than they should get. So that's that. Any questions, please give me a call. I do tax returns. I do simple tax returns. I got that question last week. Do you do a simple tax return? Yes. Will you talk about all these complicated tax matters? Yes, I do. But please, bring me a simple tax return. One W-2, that'd be great.
You're welcome.
You're welcome. Todd said you're welcome. Thank you, Todd. Todd, you're a pioneer. Thank you for bringing me a simple tax return. My telephone number is 828-289-9300. You can email me, Gilbert@GilbertCarmona.com. Todd, this is a first. I'm going to end right on time. This is Gilbert Talks Taxes right here, WCAB 590 AM.
Since the 2015 attacks, Elaine